Hi guys, so today we are here with Deshan Pushparajah, MD of Capital Markets at Cal, and we are going to put some commonly asked questions to Deshan. To start with, we'll start with the trending topic, the Port City. Deshan, how do you think the newly passed Port City legislation as well as the Port City project as a whole will affect Sri Lanka's economy, and how will this trickle down to the CSE?
So the port city is really very much needed here in Sri Lanka, and I think Sri Lanka is a country of a 20 million population. There is an extent to which we can grow, and there's a speed at which we are limited by. So the only way we can grow beyond our means and punch above our weight is to become part of the global supply chain. The port city plugs us into the global services chain. And that's why I think Port City is an essential component of our future growth, because within the Port City, whether it be financial services or many other services, I think Port City can be the service provider for this region. So that's why it's going to be very important. Plus the fact that the laws that have been put in place for the port city and the speed at which things are done can then also trickle down into other parts of the country as well. As it relates to the stock market, any fund flows into the country is obviously quite positive. And in addition to that, I think the fact that there's going to be a lot of global funds managed out of Sri Lanka could also have trickle down benefits for our markets as well. And thirdly, as the port city is built up, there will be opportunities for our construction companies, and thereafter for our banking sector and many other financial services business once the financial center really takes off.
That was very insightful. Moving on to question number 2, and this is a COVID related question. So the third wave of COVID lockdowns is well and truly upon us, and it's causing a lot of volatility in the market, which is making a lot of investors nervous. What is your take on this?
Well, it is certainly uncertain times, and therefore any investor should appreciate the uncertainties and the volatility that might come out of it. But on a broader spectrum, I think Sri Lankan companies have done phenomenally well over the last 12 months. They have been very resilient, and most of them have grown as well. There are of course certain sectors which are more affected by COVID than others, but I think the overall trend has been upwards. So we can expect a lot of market volatility because this market rally has been largely fueled also by excess liquidity, and that could create extreme volatility. But I think if you pick the companies right, then you must not be afraid of volatility. Make volatility your friend in being able to buy the right shares when prices come down.
Superb. So moving on to question number 3, and for this we'll move away from the stock market for a little while. One common complaint we've heard from a lot of clients is that the low interest regime is making saving very difficult. What are the alternate products that Cal offers their clients to combat this?
It's a very big challenge for a lot of investors today who've been used to earning fixed income and interest rates above 10%. So it is a reflection of the times and the priorities that the government has. But even in the midst of this, I think Cal is able to offer some products and services which can help you beat the current low interest rate environment. On the one hand, we have the stock market, which we've spoken about already, and another, I think we also have a very attractive unit trust product which gives you a rate that is much higher than the market interest rates right now, and at the same time allows you the flexibility of using it as a savings account where you can withdraw your money at the drop of a hat. So the interest rates there are significantly higher than the market, and therefore becomes a very attractive opportunity for investors.
We've certainly seen the unit trust gaining a lot of popularity as of late. Okay, moving on to question number 4, and this is our final question of the day. You can take this in any direction you'd like. If you could give our viewers today one piece of investment advice, what would it be?
Stay in assets. I think that would be the one advice that I would give to any investor right now. Don't stay in cash. This is an environment in which there is a lot of liquidity. Asset prices in general are doing really well, whether it be real estate, whether it will be equity, whether it be bonds. I think asset prices have done extremely well. And and inflation may come back slowly into the market as well, and so you will lose purchasing power if you are not in assets. So whatever the asset may be, stay in assets would be the number one advice I would give. Of this, of course, the equity market seems the most attractive, but it may not be the only right product for you. But stay in assets would be the overall advice.